The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And if you don't think we're down to the last second of 2017, oh, I'll tell you, we can save you some money. You still got some time. I think it's really interesting on this station, WBEN. We've been talking about this, and we've been telling everybody about what's going to happen, but it isn't until the last time of the last second of the last week that people pay attention. And so it's interesting. It is still the 30th. You have till midnight of the 31st to still cut your 2017 tax bill.
35 hours.
Right, and kind of put your thumb in President Trump's eye.
It's funny.
Really, it was, if you're a New Yorker, you're really getting it kind of in the neck, so to speak. And we're going to talk about that today. You can hear Christopher Fabian and Tiffany Fabian here on studio with me.
Hello,
Tiff
Esther.
And Chris.
Hello, Esther. Yeah, it's fun.
Tiffany and Chris, Christmas is behind you.
Yes, it is.
Kind of good.
Yeah, I love Christmas. It's an awesome time of year. I was going to say, it's funny, if you turn on the TV now, all you see is this charity commercial, donate here. So people know that people procrastinate and wait to the end, you know?
Right. Okay, but let's tell people what they can do. If you're somebody that maybe last year you didn't itemize because maybe your deductions only came to $12,000. Well, you need about a little over $13,000 in order to itemize. So let's say that you are somebody that says, I'm going to prepay my property taxes for 2018 because you went to your municipality, they gave you the warrant, and maybe your taxes are $6,000. That would mean your itemized deductions are $18,000. Your standard deduction on the federal this year is around $13,000. So you're going to end up with a benefit of around $5,000, and to that you're going to get your personal exemptions. So if you're in the 15% bracket, you're going to save $750. Right?
Yep.
If you pay it by tomorrow, postmarked. And so that's a good thing to do.
That's right.
And that's what we've been doing all week. People are saying, well, I don't understand. Because next year, your standard deduction is going to be $24,000 if you're married joint, $12,000 if you're single, $18,000 if you're head of the household, okay? But you will not get any personal exemptions. So a family this year, married joint, just maybe a husband, wife, and 2 kids, would have over $29,000 in deductions, personal and standard deduction. Next year, they'll only get $24,000. So we've been telling you for months.
Yep.
Right?
And the thing is,
we've came out with it, we told you. So it'll be interesting to see what happens. And I don't care. It is true they're doubling the child tax credit, but if you have a kid that turns 17, you're out of the ballpark. I mean, next year your taxes go up $2,000. So, and if you're somebody that uses your car in your job, or miscellaneous itemized deductions, or you pay a tax advisor, or you pay for any kind of financial planning, too bad, too sad.
And that's why tax planning is so important. So when you're sitting with somebody and they're going to have a child who's going to turn 17, you really got to plan and gauge
you really
your adjustments,
because if you
your
think about it,
withholdings.
if you had a kid, let's say you had twins that were 16 last year, next year, your tax bill goes up $4,000.
Correct.
Right?
Right,
I mean,
right.
plus
And
everything.
forget the personal exemptions that are gone too.
Right, that's what I...
Yeah.
That's what-
just to
Oh,
tell
all
you.
included in
Yeah,
the form.
Right. I mean, all right, so what can people do before, and by the way, 8030930, 8030930, star 930 on a cell phone is our phone number. Here in studio, we'd love to hear what you have to say.
And I would be remiss if I didn't let everybody know next week, Saturday, we're going to have a live remote in Lewiston at our new location. So you can come out and meet us at Tin Pan right in front. That's where we're going to do the live remote.
Right.
Yep.
It would be fun. And hopefully next week it'll be 60 degrees.
Right.
That would be nice.
Only
All right,
in your
so
dreams.
People have what, a day
35 hours.
If you have medical bills that you haven't paid, you can put it on a charge card, and if you're somebody that exceeds that floor for medical and you're an itemizer, you can really cut your tax bill by taking advantage of the medical expense. So you can put it on your charge card, write a check, have it postmarked, and it's deductible up to tomorrow night at midnight.
That's right.
Real estate taxes, if you got that warrant from your city,
Which
it
they
says
all
that
did, supposedly.
Here's your tax bill for you can prepay your property taxes. Again, if you're an itemizer, you're going to cut your tax bill.
Yep.
Because probably next year it'll be very difficult to itemize. So if you want the benefit, you should push it into 2017. Same thing with charity. Now, charity is not capped like the taxes are, but the $24,000 thing is such a hard thing to overcome. Again, if you're somebody that is maybe a tither or somebody who likes to give to charities, if you want to make sure you get the biggest bang for your buck, you might want to write your check now, December 31st, and you get the write-off. And of course, business expenses. And more than anything, I've been talking to people yesterday, and they said, I don't understand. You mean to tell me I can't deduct the expenses for me traveling around? Right.
Yep.
You mean the expenses for gifts I give to people? Right.
Taking them out to dinner, your laptop, your cell phone.
If you needed office equipment, if you needed a new desk or office supplies, this is a year to write it off, 2017, because 2018, if you're an employee, you cannot take it. So the only thing you can do is talk to your employer, and this is really what's important. As I think, Tiff and Chris, we need to talk to employers. Like, for instance, let's say you have a guy that you're paying $60,000, and you were not reimbursing them for their travel, right? So let's say their travel comes up to about $1,000 a month or $12,000. You really would be better to reduce their salary to $48,000 and give them $1,200, an extra $1,000 a month or $12,000 during the year, which brings them back to $60,000. But that $12,000 would be a reimbursement on an accountable plan, which would not be taxable to them. So it stays the same for the employee. It is tax deductible for the employer, and this way everybody's happy.
Right. And the employer doesn't have to pay the Social Security and Medicare tax on that as well.
Right. So it's really, really important. I mean, this is part of what we do is we want to make sure that we get everybody to maximize the tax deductions that they possibly can legally. And so if you're an employer and you're saying, oh my gosh, I do have employees that don't reimburse, I was reimbursing them on a flat rate, you want to kind of change the way you're thinking about the way they get paid. They're going to get paid the same, but the employee who can't take it anymore as a deduction, you want to help them so that they don't get tapped next year.
And really, Chris said a really good point. It helps the employer too, because they don't have to pay the Medicare and the Social
That's
Security
exactly
on that
right.
part.
But it's still deductible. And
Yep.
as we move into what we're going to talk about is some of the changes for business taxes, you're going to see that the employer, it's really important for the employer that they pay wages, right?
Yep.
Because that's part of the way that the pass-through is going to work.
Get the
is for
20%
employers that
credit.
Are paying wages. So let's take a short break. I'm Esther Gulius, the tax lady. 803-0930, 803-0930, star 930 on a cell phone. We're going to take a short break. We'll be back with your questions, and we're going to talk about businesses on the other side. It's Esther Gulius, the tax lady. We aren't playing Christmas songs anymore, I guess.
It could be Old Lang Syne.
That's true. I like it.
Frank's going, no, please no.
I like Old Lang Syne. I like that song where somebody meets somebody in the grocery store.
Oh, yeah. It was
I met
an old
my old
lover.
lover.
Chapin. Oh,
Yeah.
I love that song. I'll tell you. It makes me, I can hear that song
Old
in
Lang Syne.
July, and it tears me up.
Yeah.
Hint, Frank. Hint.
He's
Okay,
laughing.
So if you're somebody that's sitting around with property taxes next year that you can prepay of $10,000 and you're in the 25% bracket, you're going to save $2,500 in taxes by writing a check in the next day and a half. That's a big thing.
That's a big thing.
Let's go to the phones, and we'll talk to line one, Mr. Eric. Hi, Eric. How can we help you, sir?
Hello, Happy New Year.
Happy New Year to you.
Thank you. I am an independent contractor that is paid via 1099.
Yep.
All taxes. My wife works for a medical group, and we maximize the match into a 401k by Fidelity or Vanguard, so it's a low fee type of thing. And we make sure that our taxes are a little bit more heavily weighted with hers being taken out so that at the end of the year we're not stuck owing.
That's smart.
I drive a lot. I put about 55,000 miles on my car, which I own. I know that you just mentioned, which prompted the call, that you're not going to be able to itemize in that way.
However, I'm going to step on you, Eric.
Please.
That would be if you're an employee, but because you're on a 1099, you're self-employed. So for anyone that's self-employed, you are not going to be restricted like an employee would be. So just your fellow employees who are on a W-2 are going to get it in the neck. You are going to be fine.
Okay, one follow-up question.
So you should be dancing in the streets. Yeah, what can we help you with?
Oh, well, once I have my taxes, I'm sure that I will be, because as there's still a lot of moving variables. We don't know.
Did we miss him?
Wait, there we go. Eric?
Would it be more beneficial to have my entire car ownership under a separate business that does the same thing, where I could use my vehicle under the business name?
No, because you're going to be able to take the expense anyway on the vehicle, which is going to offset the gross income from your 1099, and you're only taxed after all your expenses on the net profit. Okay, and on that you're going to pay 15.3% in FICA and income taxes.
The tax reform won't affect you at all, Eric.
Not at all. Not at all. And when they were talking about pass-throughs, actually you'd be a pass-through, but because you have no wages that you're paying anyone, you're not going to get the benefit of the tax pass-through deduction. So you're going to be fine. You're going to still be able to do an office and home. I'm assuming you're going to work out of your home. So all of those same things will be deductible for you. And the other thing is you can do a simplified employee pension because you're self-employed on your net profit. So those are things that you want to look at, but you're going to be fine under the tax reform. And by the way, if anybody wants to go to our website, there's a whole section here under the Tax Cuts and Job Act of 2018, and it'll help you kind of sort through what is and isn't deductible.
Beautiful.
Okay?
Thank you.
Thank you, Eric. I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone, and we have Mr. Tom. Hi, Tom. How can we help you, sir?
Hello?
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 Hi.
Can you hear me?
I can hear you.
Okay, Esther, this is a strangest thing. I just turned on your program, but I swear that I heard yesterday or the day before on the news where it said, for people that want to prepay their property taxes for the year coming up, whatever, that don't bother. The IRS is not going to allow it.
Okay, so here's the thing.
Did you hear
Unless you had a governor, like Cuomo as our governor, who did an executive order, Cuomo did an executive order, and said that the counties, Erie County, Niagara County, Cattaraugus,
right,
have the ability to write warrants for people to prepay their taxes, which is exactly what they did then, and if those people took advantage of that and prepaid their taxes for 2018, they're going to be fine.
Tom, I heard that on public radio yesterday too. Yeah.
But the thing is, you had to have the governor who signed the declaration, the county that said they're going to implement it, the warrant had to be issued, and the taxes had to be prepaid.
Oh, okay. I just thought I was losing my mind.
Nope.
No, but there was most other states don't have this kind of a thing where the taxes are so expensive. My son-in-law lives in Rochester in a fairly affluent area, and he moved from Michigan. and his property taxes went up $20,000 when he moved to New York State. And he said to me, "You know, Mom, I thought to myself, well, but at least I get to deduct them." Mm-hmm. Right? So he was going to get back 40% of the extra 20. So he was going to save an $8,000 in taxes. And he said, it was worth it. He said, now it's just in the wind. And he says, you know, I'm really disappointed that I moved to New York State. And I think that's what a lot of the governors are up against at high tax states like New York, Massachusetts, New Jersey,
California.
Illinois, California. You know, these high tax states the people are really getting it in the neck. Because the way this new tax law is written, it really was aimed so that the high tax states are not getting a benefit anymore. So, okay, Mr. Tom?
No.
I know, it's not okay. But we're just trying to help you here so you can do what you can do.
Yeah, okay. So it is not true that
It is deductible.
It is
because the governor said it's a proclamation.
Okay.
The counties have warranted it. I mean, the cities have issued the warrants. You go prepay the taxes with a check by December the 31st. You're good to go.
Okay, thank you, Esther.
Thank you, sir.
All right, bye-bye.
Okay, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. You know, and how many people did, you know, I mean, I even had one of the ladies that does our commercials. She said that. She says, I just do your commercials. And people were saying, you know, Esther, call her and ask her. You know, because it became so important the last 5-6 days of the year.
Yep.
It's like people figured it out.
Yeah.
We could tell you, everybody at the office, we've been the phone has been to our ear all week. It's just,
right.
Yeah.
Okay, so why don't we before we get to our other callers, why don't we talk about some of the tax overhauls for businesses? I think businesses, wouldn't you agree, you guys, that the business person, the corporations pretty much are the big recipient of the tax cuts?
Yep, and I think that was the idea behind the overhaul, was to
right. I mean,
stimulate.
It is true that the peons are going to get a piece of a little teeny bit, and I'm going to tell you it's going to be a little teeny bit. And if you're in the wrong industry, or you did the wrong thing, or you did the wrong deductions, you're going to be very sad. Or if you have kids over the age of 17, you're going to be very sad. But most everybody else is going to get a teeny weeny bit, but corporations are going to do really good. Their tax rate is going to drop from 35 to a maximum of 21%, right?
Right. Yep.
So, you know, let's face it, you got a corporation with a net profit of $4 million, you're down about $600,000 in taxes. So
only
that's your big recipient, right?
Yep.
That's number one. So the corporate rate drops from 35% down to 21%. Then the other thing is the alternative minimum tax on corporations has been eliminated. Depreciation for businesses has been liberalized so that it already was fairly good. They just extended the bonus depreciation, and now you can take bonus depreciation even if you put in a used asset.
Yeah, which, you know, that's incredible. You know, before it had to be a brand new.
Asset. So that's a good thing. If you buy a car, if your corporation buys a car for an employee, they've liberalized what they consider to be a luxury vehicle. Before it had to be like a Mouseketeer car. But now they've liberalized the amount you can depreciate on a corporate vehicle.
Right, it almost doubled.
And 179 expensing has been moved up to $2.5 million. So that's good for big corporations. A lot less corporations have to do accrual method. And if you're a corporation filing on a C Corp and you're under an accrual method as opposed to cash basis, you ought to think about moving from a C to an S Corp because it would eliminate double taxation.
Yep.
Right?
Definitely.
Let's see. You don't inventories, the way they can do inventories, unless you have a corporation with gross receipts of over $25 million, you don't have a problem there. Interest expensing, there's you're still going to be able to do it, but there's some restriction on the amount of interest that you would be able to deduct on your corporation. Like-kind exchanges, it says that they're deductible as long as you're not in the business of selling or exchanging real property that's not primarily used for sale. And I looked at that. I was doing some research on that, and it sounds like it'd be like REITs, real estate investment trusts. Let's see what else. Entertainment. This is very interesting. No entertainment anymore. So if you're self-employed or a corporation,
No taking
there is
people
no
out
entertainment
golfing
anymore.
or-
Membership dues, whatever. You're taking people out for a facility to promote business, not going to be deductible. If you have your staff that you're feeding, it used to be 100% deductible. It's only 50% deductible now. Let's see what else. Anything else, Chris?
I mean, the big thing is with the payroll, with the 20%.
Oh, that's the other thing. The pass-through. Let's talk about the pass-through. So on a subchapter S, let's say that you have a net profit of $300,000, all right? Let's say that's 2017. 2018, you would have had the same 300,000. The first thing they say to you, well, you can do a deduction of 20% or 50% of the payroll that you're paying. Oh, I guess I have to shut up because I got to break for news. We're going to explain this on the other side. We got all your phone calls lined up, but we're going to explain how this pass-through works. I'm Esther Golias from EG Tax, 8030930, 8030930, star 930 on the cell phone. See you in a minute.
There you go.
I love that song. I'm going to cry, Frank.
Frank's going to
I
cry.
love that song. I just love that song. It takes me back to when I was in high school many years ago. I don't think there were grocery stores then.
He lies.
Anyway, I'm Esther Golias, the tax lady, 8030930, 8030930. I will tell you, our offices are going to be open here pretty soon.
The 17th.
Yeah, 17th, first day of electronic filing is on the 19th. We will help you. I'm going to tell you, we know 17 and we know 18. And when we do 17, we're going to get you prepared to do 18 so that you know. Okay?
Yep.
But anyway, back to this pass-through credit. So let's say you have a net profit on an S-Corp of $300,000 this year. And so all things equal, you have let's say $300,000 next year. However, the pass-through deduction would be either 50% of your payroll or 20% of your gross sales, whichever is lower. So let's say this subchapter S had no payroll. If he's got no payroll, then he has no deduction.
Right.
So this is going to make your people that are paying people on a 1099 really rethink whether or not they want to pay people on a 1099. Maybe they want to make them employees, because in this situation, if this company had 200,000 in 1099s, then 50% of that would be $100,000, right?
Yep.
And so it would either, and let's assume that their gross sales were $1 million, so they would take either 20% of $1 million, which would be 200,000, or the 50% of the payroll, 100,000, and so they'd end up with $100,000 deduction if they had employees, which would make them come through on a pass-through of 200,000. So this company would save 100,000. Now, for that, they're going to have to pay 15.3% and some of the other expenses. So they have to put a pencil and paper to it. But that's how this deduction is being done. It's based upon your employees and your wages, and yourself cannot be considered. If you're the wage earner in your corporation, you can't be considered for the deduction because you're the shareholder.
Wonder if businesses will be tempted.
So this is really, really important. And if you have any questions, call EG Tax. We'll help you, because there's going to be corporations that are redoing things, rethinking things. I heard yesterday on Fox News that they were saying that they're giving corporations are giving salary increases. You bet you they are. Because they're going to get it back in the back end.
Yep. Pretty cool.
Right?
for the employees.
If you need any help, just give EG Tax a call. Let's go back to the phones, and we have
Terry from Amherst.
Terry. Hey, Terry, how can we help you?
Hi, Esther. I have a question. I bought 2 fixer-upper properties last year.
Okay.
I'll be hopefully in the next couple of months I'll be putting them on the market.
Okay.
So should I? No, the next tax, the property tax. Does it help me if I put if I pay those taxes that are due that just came out for 2018?
Oh, okay.
Do
All
you-
right. So, Schedule E's, Schedule C's, corporations, anything other than a 2106 is going to be fine. But you're going to be able to deduct those property taxes either on 17 or 18 in full. So I think that unless you have a lot more money in 17 than 18, you'd probably wait.
Do you have
to
them
pay 'em.
actively ready for rent right now, Terry? Are they ready? Are they rentals that
Or
are
are you
getting
just
ready?
flipping them?
No, I'll be selling them.
He's just flipping.
Okay.
Hopefully within the next few months.
Well, either way,
Yep.
it's going to be deductible.
Yep,
for
yep.
you.
So you're gonna be
I think
fine.
the best thing to do, and it's kind of late to call us now for us to work, to let you know which works better for you, but it's going to be deductible either way, so you're not going to lose out. And I have to tell you, the tax brackets on the bottom haven't changed at all. It's still 10 to 10. If you are in an upper income place, my nephew was over the other day and he said, "Oh, Aunt Esther, I'm going to really make a killing." And I said, "Well, you're only down 2%. And he says, "What? I thought I was really going to make a killing." I said, "Well, you're losing your 2106 and you're losing this, but and you're down 2%. And he said, "So what's it going to mean to me?" And I said, "Well, you're going to owe him about $600. And he said, "What?" And that's really how it is. So not everybody's going to make out. Some people are going to make out a little bit. But in your situation, Terry, I guess I wouldn't worry. It's going to be deductible either way.
So don't go prepay
Yeah.
them.
All right?
Yep, he's gone.
Thanks. Well, anyway, and he would have need the warrant in order to do that, right? He
Right,
had
right.
gone
And the
down to the
prepayment's
city.
only for your county tax. They didn't
Right.
issue the warrant for the school tax. I know a lot of people were asking about that as well. They only did the warrant for the county tax.
I'm Esther Gullius, the tax lady, 8030930, 8030930, star 930 on a cell phone. We have Jeff from Hamburg. Waiting.
Nope, something must have happened to the phones. So if you are on
Jeff
hold
is
and
not waiting. But you can give us a call, 8030930, 8030930, star 930 on a cell phone. We have all of our offices that are going to open up shortly. We're open 9 to 9 Monday through Friday, 9 to 5 on Saturday. And I think what's so important is that we're doing 2017 and 2018 with 2017 tax laws. But we're going to get you ready for 2018 when you come in, so that you'll know how to get ready for 2018 and what's available to you. And I think that's what's so really important too.
Right, because supposedly they're changing the Circular E, which is your withholding for your pay. So you're going to want to make sure that your withholding is correct. You don't want any hidden surprises next year. Well, I didn't change anything. You don't have to. The withholding tables change. So,
And
your
I
nephew.
kind of do think, I mean, maybe I'm cynical, but I kind of do think that those Circular E's are going to be liberalized so that there's more take-home pay to make everybody feel better.
Right. But it may not be enough. They may have given you more where you
To
may
make
not
feel
have wanted
better,
to
and
give.
right, and at the end of the year, it may not be what you think it is.
Yep.
Right?
Yes.
So, anything, 8030930,
Don't-
8030930.
And we have 3 mall offices this year. We're going to be
We're in the Boulevard Mall.
the Boulevard Mall new office this year. So 3 offices are going to have Sunday hours, which, we don't like, but we have to do it because of mall hours. Mall wants us to. So for those people who can maybe be the only day to get it done, we'll have 3 options. South Towns, North Towns, and basically Buffalo, because Boulevard Mall's by Buffalo.
That's true. Okay, 8030930, 8030930, star 930 on a cell phone. And I know we have, Kim here?
Jim.
Jim. Hi, Jim. How can I help you?
Jim, can you hear? No, this is Jim. Can you hear me? Yeah.
I can hear you, Jim.
Okay. I've heard something about property tax prepaid for personal residence before the end of the year. Is that for an amount that exceeds? Is the saving for an amount that exceeds $10,000? Is there any deduction at all?
Okay, Jim. I know who you are.
Right.
Okay, so here I know your voice. In your situation, it won't make any difference. So you and your lovely bride just enjoy dinner out tomorrow night and don't even think a thing of it.
All right, I won't think about it, but we won't be out because she's had some surgery done on her. Great.
How's everything? She's okay?
Yeah, she's fine. She's wheeling around the house on one of those knee.
That's great. Well, she's a lovely lady. Well, Happy New Year to you, Jim.
So she's doing fine. Thanks, honey.
Thank you, dear.
And that's, he brought up a point. A lot of people are confused with the $10,000 limit. Is it the property taxes is just limited to $10,000?
It's everything.
It's that whole section.
Mm-hmm.
The state and local taxes
local taxes,
which isn't much.
Sales tax and withholding.
Yep.
Nope.
Right?
When you consider
Next
all
year.
of those, yeah.
And so, here's the thing. People say to me, so what, everybody's getting so nuts about the $24,000. So you no longer get personal exemptions. So in order to itemize, you have to come up over $24,000. So let's say you have no medical. And your property taxes are limited to 10. You have no mortgage interest, so now that's 0. And your charities are $3,000 and you have nothing else, so you're at $13,000 and the standard deduction is 24. That's it.
Yep.
So
Not
that's
much.
why people are moving things into the previous year, 2017, when the standard deduction was around $13,000, because it's so much easier to come over the $13,000. Plus, then you also get your personal exemption. So this was a masterfully written bill, and it is not necessarily in everybody's best interest.
But I can see as a different president is elected, things will change back again. Maybe.
Well, it's interesting because as this thing unravels and people see how it all affects them, things start to rattle, and they call it a permanent tax bill change. But I've learned in Washington, nothing is more permanent than what happens in the next election.
Yeah, it's only permanent until they change it.
That's exactly right. Okay, I know we got phone calls, line 1, 2, 3, 4. We're waiting for your call in line 5. We're going to take a short break. I'm Esther Gullius, the tax lady. 8030930, 8030930, star 930 on your cell phone. See you in a minute. Frank, come on. I don't like that kind of music. I like, what are you doing?
It's a guy. The person in the grocery store could find the other one.
That's my kind of song. Anyway, I'm Esther Gullius, the tax lady from
And that's
EG
why
Tax.
Esther does taxes.
Why? Because I like mellow music. Okay, and if you're a small business owner, I'm going to tell you there's a lot of changes that you need to talk about. EG Tax specializes in not only personal tax returns, but small business tax returns. If you have employees, you want to make sure that you restructure their reimbursement plan to make sure that it's deductible to them. Otherwise, you're going to lose your employees. I'm going to tell you that because the 2106 is eliminated. So you give EG Tax a call. Let's go back to the phones. We have Bill from Middleport. Hey, Bill.
Good morning. Good afternoon, I mean.
Oh, my God, Bill. It's 3:40.
Oh, I know. I'm getting old. It's my excuse.
You're celebrating the new year too early, Bill.
Yeah, I know. I want to find out a little bit more information on everything. The way I'm understanding with this pay up early in that is 18 into 17, right? And so you have 17 and 18, you can deduct those 2 years?
For
Right.
property taxes, yes.
Right. It's all taxes on your personal residence that is assessed by you and paid by December 31st of 2017.
Okay. What about 19? Can you deduct it again, 18 into 19?
No.
Oh, you
No,
can't?
the only reason they're doing this is to move forward because it's
It'll
going to
be
be
more
more
difficult.
difficult next year to itemize. So they're moving forward this to deduction into 17 where they know you're going to be able to get the benefit. In 18, you probably won't be able to itemize going forward at all.
Okay, that's all I wanted to find out.
Thank you, sir.
That was easy.
All right. That was easy. And let's go to Bobby. Hey, Bobby. Hello, Bobby.
Hello.
How are you, sir?
Good. I have a question. I own 4 stores in Buffalo, and all is under different corporation, S Corporation.
Okay.
And I put about 150 miles every day, so how I can claim expenses for my car and for my gas.
Sure.
Yeah. Well, is the car owned by your corporation or is it personally owned?
Personally owned.
Okay. Then.
Okay. Does the company reimburse you, Bobby, for your expenses?
No, I own the business. So
okay. So this is what's real important. Good question, Chris, to ask. The corporation would have to reimburse you. If the corporation reimburses you as the employee, then it's not going to be deductible in the future. What you need to do is submit an expense report to your corporation so that they will reimburse you the effective mileage rate for the mileage that you're doing for your corporation. Then it'll be deductible on your 21 on your
corporation
subjector S, and then you're going to get the full benefit. Otherwise, if you're thinking of using your 2106, it won't work because there is no 2106 anymore.
So yeah. I need to get the expense to all 4.
That's right. So you need to come up with an expense reimbursement sheet. Every month you submit it to your corporation. Your corporation will then write you a check, which will be fully deductible to your corporation and will not be taxable to you.
Okay, thank you very much.
You're very welcome. Okay, and that's what really, that's the kind of message I want to make sure, because it's all going to end up being the same bucket of worms, so to speak. But if you don't know how to structure your bucket, your employee is going to get hurt or your corporation is going to get hurt. So this is why it's so important that if you have a small business corporation, that you understand what to do to make sure that you're getting the biggest bang for the buck as this 2106 deduction unravels.
And really, I have a client that I do that Chris does their corporate return for, and they have a cleaning business. And Chris had always told them to make sure you run the business miles through your corporation, then spread it out to your personal. And so Chris gave them great advice that they had been missing for many years. I had the crystal ball. Yeah, he had the crystal ball. So that had always been a better plan to do it that way, right, Chris?
And it is, because otherwise, on a 2106, if you just took the expenses on your personal return, you had to limit it by 2% of your adjusted gross income.
That's right.
Yep.
So now, in this situation, if the corporation reimburses the employee, it's going to be 100% deductible to the corporation and not taxable at all to the employee. So it's a win-win.
That's right. Okay? Even better now.
Let us go to talk to Mr. John. John, how are you, sir?
I'm good.
Happy New Year.
Got a couple of questions for you. You're talking about paying taxes that are would be normally due in February of next year.
Yeah.
I pay them. The office over there is closed. How do I even know what amount to pay?
Well, actually, at this point in time, now it's going to be too late. It's kind of a moot point, because you really would have had to gone to your municipality yesterday, and everybody would have been there. You would have been with a lot of people who were trying to prepay their taxes. They would have told you how much your taxes are going to be assessed. You would have had written a check yesterday to your municipality, or unless they gave you a warrant, you could write it today. But at this point in time, there's nothing you can do.
Yeah. Okay, another one. 2018, are the rates lowered in any way? And when
the bottom rate is the same, and if you want to go to our website, there's a section called Tax Cuts and Job Act of 2018, and you'll see that the bottom rate is the same. It's at 10%. They had talked about it originally being 12, but it stayed the same. Pretty much the top rate is down way at the top, is down about 3%.
I don't care about the top rate.
Yeah, but I think you're going to find that depending upon where your cutoff is, if you're at the lower end, you're not going to save too much. If you're at the upper end, you can save 2 to 3%.
Yeah, well, I'm on the lower end. One more question regarding 2018. There's a big deal about, making the standard deduction doubled.
Uh-huh.
They double it, but then they take away the personal exemption.
You are so right. You're the only person I know that got it. It's true.
Okay.
I mean, people are going, oh, Esther, but they doubled it. Yeah, well, they took away your personal exemption. So truthfully, if you had no kids, you might be up $2,000 in tax. You'll be $2,000 less in taxable income, which is a $200 savings. Now, $200 is $200, but it is not a big deal. I mean, $200, please.
And with my, I itemize my deductions.
Uh-huh.
And my itemization last year was about $33,000.
Oh, well, you'll still be able to itemize.
So what I...
But you were $33,000. Are you single?
No, I'm married.
All right, so it was $33,000 plus $8,100, right? Because you got the personal exemption.
Yeah.
So it was 41. So it was 41,000.
Right.
So this year it'll only be 41,000. It'll only be 33,000. So you'll be down. So you'll be down 8. And so for sure your tax bill's going to go up anywhere from 800 to 1,000.
Yeah, that's what I figured. Okay, thanks.
Thank you. Okay, and then we have Kevin. Hey, Kev, how can we help you, sir?
No, Kevin.
No, Kevin. Mike.
Yep.
Hey, Mike.
Hello.
How can we help you, sir? Happy New Year.
Happy New Year. Got a couple of questions. I usually do my own taxes, and my wife passed away this year. Do I need to do anything different?
No, I'm sorry to hear about the death of your spouse. You're going to file a joint return, just like she was alive at least some part of the year, correct?
Yes.
So you'll file a joint return per normal, and then next year is there children living in your home, or is it just you?
Just me.
So, and then next year you become a single taxpayer. But for 2017, you'll file a joint return.
So you want to make sure you plan for that different filing status.
Right. That's exactly. Tiffany's right, because next year it'll cost you more money.
Wouldn't I file under widower?
No, you won't file under widower, because in order to file as a widower, you have to have dependent children. That's why I asked you if you had children at home.
Oh, okay. Now, I also got life insurance payment. So do I have to claim that?
Not if it was a death benefit on a life insurance policy. It's going to be tax-free.
Okay. Yes, it was. Okay, then.
That's good news. Sad news, but good news.
It's sad news, but yeah, but that'll be the situation. And if you need any help, just give us a call. We have all of our offices open, staffed with people who are human beings who will answer your tax questions for you.
Okay, thank you.
You're very welcome. That's the sad thing, about life. Life goes on, right?
Mm-hmm. Yep.
Yep. So, anything else you guys want to say? Is there anybody else on the phones?
we have Dave
and Marcia.
Yep.
Oh my gosh! All right, what line is Dave on?
I got Dave.
Hey, Dave.
Happy New Year, guys.
Happy New Year.
Okay, thank you. Let me ask you a question here. I'm not sure if I itemized or not.
That's the answer that a lot of people have. The same thing you just said.
I don't know. So I unfortunately, my taxes are disgusting because I own a lot of properties, and 2 of my properties are not rental, and they exceed the $10,000. But if I itemized, would I be able to itemize everything?
No. Okay, so your Schedule A is your itemized deduction, and you're going to be limited in 2018 to total taxes, which would be property taxes, state withholding, and sales taxes, maximum of $10,000. That would be for personal. But if you have investment property, of which it sounds like you have rental property, that's an item completely separate from the Schedule A. And on your rental property that you're trying to make money on, you are not going to be limited. So you have to segregate your personal from your rental. Your rentals are going to be deductible as long as you're trying to make money, and your personal property is going to be limited to the $10,000.
Right, but what I was wondering is that how could they say that people are itemizing their personal, or can they?
Yeah, that's been in the law a long time. So that's called a Schedule A, and so there were deductions that you could take personally, and if you had a business of rental property, then you are allowed to take those expenses as well.
It doesn't make any difference. 6 1/2 doesn't.
But it does. The way the forms are written, it does make a difference. So anyway, well, Happy New Year. God bless you. All right, let's go back to the phones. Who else we have?
Marcia.
Hey, Marsh, how can we help you?
Hi. Happy New Year.
Happy New Year.
I work a therapy dog, and I do take my mileage because I'm a volunteer.
Sure.
But can I take like half the cost of her shots, her grooming?
If you have charity, now charity is one of the things that are still going to be deductible, provided you're going to be able to come up over that threshold, okay? Then all the expenses that you incur that are ordinary and necessary in order for you to fulfill your function as a volunteer are going to be deductible.
Okay, great.
Okay.
That helps a lot.
All right. Well, I just wish you a happy New Year, and for everybody that's been so wonderful to EG Tax over the years, Tiff and Chris and I and all of our staff. We just want to thank you for your loyal listenership, for your loyal patronage, and we are so blessed at EG Tax to be able to help so many people, and that's our calling, right, guys?
That's right. That's our mission.
That is our mission.
No idea.
Tomorrow night, what are you guys going to do for New Year's Eve?
Watch the Bills game.
And hope they win.
I hope they do too. You were very good, Chris. You're out there freezing your Cadoti off yesterday.
Yes, for the U.S. game. U.S. Canada.
Yeah,
they won in overtime.
Boy, I'll tell you, it looked really cold.
I had heaters above me. It was great. So.
Okay, until next week, when it'll be 2018, yay! And we know taxes, so we'll get you out of the pickle 2017, 2018. Until next year, thank you for everything you've done for us. God bless you. I'm Esther Golias from EG Tax. Thank you. Bye-bye.